recent finance news, Charles Schwab, TD Ameritrade, and ETrade have followed in the footsteps of Robinhood and are now commission-free. This is groundbreaking because it is now totally 100% commission-free to trade stocks, ETFs, futures, options, you name it. And if you haven't seen the video yet where I show you the pros and cons of using Robinhood, you could see that video, link is in the description, and you can see that notification on one of these two corners if you're on desktop. In that video, I shared my thoughts and opinions on the brokerage platform Robinhood and why it's so great, but then there's also some things that are not so great about it. So if you haven't seen that video yet before watching this video, be sure to check that out. So we are now officially saying goodbye to the days of entrance and exit fees, meaning you can now trade stocks as much as you want, of course within SEC regulations, 100% commission free. So in this video, I'm just going to give you the rundown, my thoughts, my views, my opinions on what's going on and how it will impact you and everything you'll need to know. So before we get into that, just to show you how significant this is and how massive of a risk these companies are taking, they're going to be losing billions of dollars combined. I'm just going to run down some numbers with you. So slashing trading fees will eliminate billions of dollars in revenue for these brokerage platforms. Some might be able to handle it better than others, but a lot of them are getting crushed. So Charles Schwab was the first to follow in the footsteps of Robinhood. They were the first to nix their fees, followed by ETrade and TD Ameritrade. It's estimated that they'll lose $360 to $400 million in revenue, as 7 to 8% of their business comes from trading fees. TD Ameritrade is expected to lose $220 to $240 million, as trading fees make up 15% of their gross income. For ETrade, trading fees make up about overall 11% of their total revenue. Just this last quarter, it was forecasted that $70 million of their revenue came from just trading fees alone. Now, out of these platforms, analysts predict that Charles Schwab is the best to handle this situation with more than $10.7 billion in total revenue. And interestingly enough, if you look all across the board, all three stocks were down following the announcements. So one can only predict that people are going to be selling their shares and moving their money from Robinhood to ETrade or TD Ameritrade or Schwab, because they're already established massive companies who've been around for tons of years. They run ads on TV. Everyone knows these names. They're established, trusted brands. So this could potentially very much hurt Robinhood. They're going to lose a ton of customers, and it's getting brutally competitive. So my thought is that these platforms are going to have to do something to greatly incentivize people to use them, because now it's getting so competitive that you have to stand out and really look like the leader in the industry. So they're going to have to come up with some great incentives. For example, they might want to follow Robinhood's footsteps of getting a bonus when people sign up under you, perhaps some sort of a commission structure. Robinhood offers a free stock on everyone that you refer. You get a free stock, they get a free stock, and by the way, my Robinhood link is in the description, so if you want to sign up there, you'll get a free stock, I get a free stock. It's a win-win scenario. Maybe they want to do some sort of a match structure. You deposit $500, they'll give you $500 to play with, something of that nature to really stand out. Also, a lot of these platforms offer level 2 data that they might want to offer for free, or maybe a free trial of their service. With this level 2 data, you usually get candlestick charts that are real time. You also get real live trades and spreads and bids and asks at that second. These are just a few examples of what these platforms would have to do, they must do, to make you want to leave your existing platform and go to theirs. Now, my opinion is that overall, even though it might hurt their revenue in the short term, overall this will do great wonders and will have a great positive impact in the long-term picture. And what I mean by that is that it's becoming more and more apparent that the average person can invest, and it's not just the large institutions or wealthy people that are able to invest. Investing is becoming more accessible. You can do it right from your smartphone, right from your device, and it only takes a few seconds to set up and only takes a few seconds to buy stock. It appears there is some sort of a movement going on where people are becoming more concerned about their future and what it will look like. It appears people are becoming more knowledgeable on high costs and the rising costs of living and their debt that they're taking on. And so people are worrying about retirement at an earlier age now. So I think these platforms are lending a hand in helping people want to achieve success and secure their financial future. Now, personally, out of these platforms, I've only used Robinhood and ETrade, and if you haven't seen my video yet on showing you how to open an ETrade account and buying stock for newbies, for dummies, you can see that video. Link will be in the description as well as one of these two corners if you're on desktop. So in my opinion, both of those platforms are very user-friendly. The user interface is easy to use, it makes sense, and they have great customer support. But as I mentioned in my pros and cons video, the problem with Robinhood is that one of the big ones is that DRIP is not available, meaning any dividends you get from stock are simply credited to your account as cash. You can withdraw it at that point or buy more stock. but you can't actually have it automatically reinvested into a stock. And you probably wouldn't be able to buy more stock anyways with Robinhood, because Robinhood does not allow you to buy fractional shares. Meaning, let's say from your dividend you only had enough money to buy a half of a share, Robinhood is not going to let you do it. So that's what I mean exactly. These companies are going to have to step up their game to want to keep their customers and offer even more incentives. There should be no reason why someone that's wanting to invest on your platform is not able to have their dividends reinvested. And for most young people starting very small, they're not going to be able to buy whole shares by any means. Also, Robinhood does not offer any tax advantage accounts. They do not offer a retirement account and IRA, whereas ETrade does. So now that ETrade is commission free and all these other platforms are, personally, in my view, I'm going to say stay away from Robinhood. Dividend reinvestment is crucial and very important to building up and compounding your earnings. The gripe with all these platforms I always had was that these platforms, it becomes very expensive and the fees end up eating into your profits every time you buy more and more stock. So for example, on ETrade, the entrance and exit fee is $6. So let's say you followed an investment plan of wanting to buy shares of a company every single month. So $6 times 12 months, that's going to be $72 right down the drain. But now we'll no longer have that problem. So if you're deciding between Robinhood or a trading app like Robinhood, you're going to want to go with the more established, bigger companies like ETrade, Charles Schwab, or TD Ameritrade. So those are just my quick thoughts on the current state of investing and the recent news. So I wanted to hear your thoughts down below. Tell me, do you use any of these platforms? Have you had experience with them? Are you going to be switching from one platform to another? Tell me down below in the comments. I want to hear your thoughts. But I do hope you enjoyed that video. If you did, be sure to give it a big thumbs up, smash that like button. And if you want to see more from my channel, I do videos just like this every single week, from anything covering money, whether it be investing, finance, business tips and tricks, personal experience, whatever it might be. I do it on this channel. Be sure to subscribe to my channel. And if you'd like to be notified every time I upload a new one, so that way you're first in line, be sure to hit that little notification bell as well, so that way you're notified every time I make a new one. See you in the next video.